which is on our radar is MPS. The digital services provider has gained more than 114% in the last 1 year. It reported a healthy revenue growth while EBITDA margin fell sequentially. We have with us Rahul Arora, who's the chairman and CEO of the company, who's joining in to discuss the quarterly numbers. Mr. Arora, hi, welcome to the show. Well, wanted to first start by asking you about fundraising. We do understand that you have an approval to raise 250 odd crores via QIP. Is it just an enabling resolution? Are you looking to raise funds?
Yeah, at this point, we're sitting on a very impressive balance sheet. We feel we're well equipped for the next couple of acquisitions in FY24. And even if at that point, if we do exhaust the funds that we do have, we probably can look at a debt of about 130 crores. So at this point, I think the QIP was really more of an enabling resolution that could allow us to participate in acquisition opportunities that were larger bites. But at this point in time, it looks unlikely.
Rahul, afternoon, you've got 3 business lines: content, e-learning and platform. Can you tell us a little bit about each of these, because it's not often that we chat with you. So tell us a bit about the business and what would be the drivers for each going ahead.
Yeah, so while we report ourselves as content, e-learning and platforms, those are essentially the types of services that we provide. We've started looking at ourselves as more from outside in. So the markets that we serve are corporates, education and scientific research and community. So those are the 3 markets that we serve. And the services that we provide include content services, platform services where we license our technology to our customers, as well as learning services. And the problem that we're solving is we're helping our customers, engage with the learners more meaningfully. So that could be, just taking existing content and making it more engaging and interactive, or building an entire learning program or learning experience using the latest tech. So to kind of summarize, the goal or the objective really is to help make learning smarter and more fun as our customers engage with their learners.
So when you talk about content, per se, are you publishing books? Because I believe historically, MPS started as a book publisher.
Yeah, so MPS was a subsidiary of Macmillan, which is a textbook publisher. So we've historically helped publishers process the content to make it available for their market, and that could be print or digital. So essentially what we are doing is, once a publisher decides on what content they want to produce, we're helping them enable that the production of that content to a platform or towards print. So we tend to be more back end, but that was a more historical way of looking at the business. Increasingly, our business is transitioning more towards digital and learning.
Okay. You have around 200 crores of cash on books. How do you plan to utilize it?
So like I said earlier, the next couple of acquisitions are primarily going to be funded by internal accruals. And overall, we've had a fairly, generous dividend distribution policy as well. So any point in time, if we feel that the management doesn't have, usage of those funds, we tend to redistribute the funds as well. So possibly looking at a couple of acquisitions this year, and if there's any surplus left post that, that will obviously be redistributed to the shareholders.
Got that. You have a Vision 27 plan, I believe, where you want your revenues to be about 1,500 crore rupees. Last year, you clocked revenues of roughly 500 crore rupees. Could you tell us what would the revenue growth trajectory be from 500 to 1,500 in the next 3 years?
Yeah,
how much would be M&A? Go ahead.
Sure. So looking back historically, all our growth was acquisition-led, and a large reason for that was we were basically acquiring distressed assets, and we would take 3 to 5 years to turn them around. So the management was mostly focused on rescuing a company every year. We've changed that strategy, and we're now looking at acquiring more healthy companies. And as a result, organic growth has picked up, and acquisitions are now turning out to be truly accretive to the business. So going forward, our expectation is that we feel very comfortable that during this course, the business can grow from 500 to 900 crores organically. That represents roughly 12 to 13% type of growth. And over and above that, we think we can acquire another 600 crores through acquisitions. So that's the kind of split that we're looking at.
Okay, all right, Rahul, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is MPS. We need to take a short break, but up next, we'll be focusing on a lot of stocks that are buzzing in trade. Stay tuned.